guys, it's Alex, but I go by ACFL in our Discord, and in this video I'm going to talk about how to identify trend lines and how to make effective trades, whether it's short or long, with these trend lines so you can act like a sniper in today's markets. So thanks for tuning in, and I hope you enjoyed the video. Alright guys, so when it comes to trend lines, you got to keep it really simple. Identify a minimum 2 touch points so a trend line can work out, and find a series of higher highs and higher lows, lower highs, lower lows. It's that simple, right? And I'm going to demonstrate that to you. And more importantly, by being able to successfully identify these trend lines, then it's about identifying key entry points for your shorts or your longs to make effective and really sniper action type of trades. So let me just show you the first one that I see here. This is the S&P 500 futures. And this is on the weekly chart. The great thing about creating trend lines is that you can identify trend lines on any time frame. So that's pretty nice. So the first thing I'm going to do is show you the series of higher highs, right, on the S&P 500. So here's point number 1. You've got 2, 3, 4, 5, 6. So here you already have a lot of touch points. Then higher lows being established. Right here you can see that price action up here is getting tighter and tighter, but over here you've got 1, 2, 3, 4. You've got a nice test of this trend line, but acted as support because you can see that on this week of November 2nd of 2020, the market bounced off really nicely off of that support line and kept trending higher. So here you can see this is very simple, and from here then we can talk about how to identify smaller trends and taking those day trades and swing trades. So let's move it to the daily chart so that we can identify some points and some examples that I can show you. So still having my drawing cursor here, let me show you this one. So if you guys remember, last year we did have several really nice pullbacks in the market, and I'm going to focus on this area right here. So from this point, we did have some overbought conditions with the S&P 500, and then we ended up pulling back. So we can draw a trend line here, right? Boom, right? Touch point number 1, 2, 3, 4, almost 5 and 6. But you can see that there's a series of lower highs being established here as the market was correcting. But then down here, look at this, check this out. You had 4 days of price action bouncing and testing off of the pandemic lows trend line that we established on the weekly chart. And that was potentially a nice buying opportunity for you, because then a couple days later, you had almost a retest of that trend line with these 2 days. But on this day, on October 14th, you had a nice rip out of that downward trend line that we were in, and you could have gotten back into an active sequence of going long the S&P 500 via options, futures, or commons if that's how you trade the S&P 500. So this is one nice example of a market pullback within the bigger picture of the upward trend, right? And we are currently in a similar scenario as well. So this is 2022. You can see that this was the highs of January 4th. Market's pulling back a little bit because we've got some macroeconomic concerns. Inflation is at 40-year highs. The Federal Reserve is talking about, reducing its balance sheet, hiking rates, etc., etc. So, and then there's now potential stagflation talks. So with all of that, we've now got a market pullback, and we're at all-time highs, and it's potentially going to spook the markets. It's impacting the NASDAQ 100 more so than the S&P, since the S&P is a little bit more diversified. But nonetheless, the S&P is going to feel it, because I think, if I'm not mistaken, about 30% of the S&P 500 is comprised of information technology and communication stocks, which is pretty much all mega cap, high value tech stocks. Right. So here you can see we're still in the bigger picture of the upward trend, right, in the market, but we're having a pullback. So now you've got a series of lower highs. So point number 1, point number 2, point number 3, and we're coming very close, right, to testing this trend line. We almost pretty much did it on this day, but we had a nice market reversal. But now we're coming back down as we created that new higher low being established here. So very soon, there's going to be a price action squeeze, whether we break out of this trend line and continue that move to the upside, or we break down and we potentially go into market correction, and who knows if we do even see a bear market. Bear market would require 20% correction in valuations and in the market. So with that being said, knowing these trend lines help you substantially to identify key trades to take. If we break below this trend line, you definitely want to be on an active sequence of being short, the S&P 500, or perhaps maybe even the NASDAQ. It might be a better price action there, more volatility. But if we break out of this, you definitely want to be long the market again and break out, right? Potentially go maybe even to 5,000, as there are a lot of strategists who suggest that the S&P can go to 5,000, maybe 5,200. So let's see about that. At the end of the day, I personally don't care whether the market goes up or down, because you can make money in any market conditions. I just want to make sure that I identify key opportunities to take a trade. Now we can even go into the 4 hour. You can see the 4 hour, it will be very similar, to the daily chart. But I like this as a good example, right? You can see that we were in a nice downward trend. You can see the testing of that really large trend line since the pandemic lows. And then on this day, at the 9 a.m. when the market opened, we broke out of that trend line and the market continued its march to the upside. Now, from that, you can even, check this out, right? You can even see there. So you could have bought the market, right, on that breakout. And let me just adjust this a little bit. Yeah. So you could have bought the market at that breakout, right, and seen this price action here, kept your position long so long as the market maintained, above that trend line. And then here, when it broke below it, that's when you could have taken your profits, right? And it wouldn't have been a bad trade, because since that break right here, you did have a poke, into new all-time highs, but then you had to there were some challenges occurring, right? So it could really save you from being stuck in a trade. I like to stay in trades that maintain trend lines, whether it's up or down. And by drawing these trend lines, it helps me a lot. You can tell that I don't have moving averages, I don't have VWAP, because my main strategy is just to trade trend lines. So it helps me identify key entry points and to stay within trend, and I'm in and out so long as the trend lines don't break. So with that being said, if you have any questions or any comments, you can write them below. Make sure to subscribe to our channel and turn on that notifications button so you can stay in tune with all the other content that we publish. And join our Discord. You're going to see us very active. We've got a growing community there, and I think you'll benefit a lot from it. So thanks for tuning in, guys. I'll see you in the next video.